Let's get straight into it. We're looking, as I said, at the launch of the FTSE Pan-Africa Index Series today. What exactly are we looking at?
Well, thank you very much. I think the key thing is that, as we know, investors globally are facing sluggish growth in developed and, of course, some emerging markets, particularly in Europe. And so generating portfolio returns remains difficult, and therefore investors continue to search for new sources of return. So the announcement between FTSE and the African Security Exchanges Association, I know that's a bit of a mouthful, or ASIA as it's known, really is to focus on Pan-Africa as a whole through this new Pan-Africa Index Series. And one of ASIA's goals is to facilitate the development and promotion of products and services for Africa's capital markets, and the new index is very much at the heart of that objective.
Taking a look at the commentary that's come through, I mean, it's eligible securities domiciled in 19 African countries. What's the criteria?
Well, the first criteria is that they should be members of ASIA. The focus is between FTSE and ASIA, so it looks at any company that's registered with any of those exchanges. We then apply some of FTSE's sort of renowned standards in terms of free float liquidity screening to then get us down to a narrower set of constituents. We do a couple of other things that's quite important. Although the index is for Pan-Africa, we don't want to have a scenario where perhaps any one country is slightly too high in the weightings. So we cap any one country at 20%, and the number of securities can never be greater than 30 for any given country within the index.
How does this address an issue that, of course, many foreign investors have front of mind when approaching the African continent when it comes to investing in our markets, and that liquidity? How does it address the liquidity issue, Jonathan?
Well, actually, I think it certainly does address liquidity, because the stocks themselves are liquidity screened. We look at each individual market within the index. So let's assume if we start with, for argument's sake, Botswana, we look at the average liquidity on Botswana over a 6-month period, and then we compare individual stocks to the average liquidity on that market. And that means that we're holding up good corporate governance for investors internationally who would require that in order to adopt such an index as a performance benchmark, or to move further on in the future in the creation of financial products. But I think one of the other challenges historically for investors looking to focus on Africa has been access to reliable and persistent quality information. And so the new index helps address corporate governance concerns as it adheres to FTSE standards around innovation, transparency. Of course, it's rules-based and is independently calculated.